I feel like trading is each person's art form, kind of an expression of that art, and everyone's going to be different. And we can look at things that good traders do and things that losing traders do, which everyone can kind of read on a book or a chat forum.
Welcome to another episode of Tradervue Conversations, a podcast done with real traders sharing their knowledge and experiences. I'm your host, Richard Alder, and I hope you enjoyed this conversation. All right. Hello, Brad. Welcome to the first edition of Tradervue Conversations, and we're really happy to have you here. And yeah, how are you? How's it going?
I'm good, Richard. Happy to be here. Thanks.
Good to know. I'm glad. So let's get started. Tell us a little bit about yourself. How did you start trading, and what markets do you currently trade?
Sure. I started trading professionally after college, which was 2003. I was trading even when I was in junior high school, just messing around on my own, trading in high school on my own. We had a mandatory gym class in junior high school, and the guy who taught it was always looking at his quotes on Yahoo. And this was during the internet boom. This was pre-2000 when stuff just went crazy. It was kind of like, it's somewhat similar to what we just had during the pandemic, or what we had in maybe 2017 and recently with crypto, but maybe even more pronounced. But it was the whole tech run up. So that's where I first got involved. And it's just, for me, I don't know, I grew up in a small town in Wisconsin, but I always just knew I wanted to trade. It didn't even make a lot of sense that I would be a trader, given where I grew up, and I didn't have any trading around me, but I've been drawn to it for a long time. So that's kind of how I started off, in a brief way of how I started. And it was always futures when I began. And then when I got out of college, I got hired by a prop firm in Chicago, and I spent about 12 or 13 years there, and it was mostly futures. It was S&P and Euro stocks futures, and then it was 10-year and Euro currency futures on events, sometimes even grains and things like that on a crop report. So it was a wide variety, but mostly equity futures, I would say. And then from there, on my own, when I left the firm, I kept kind of a lot of that stuff that I still do. And that was in 2015 to go fully on my own. And I got into stocks more. So it was stocks, earnings plays, continuing to do the futures, a lot more crypto stuff. I started adding different position trading strategies. So that's kind of where I land today. So it's a mix of a lot of things that I've learned over the years, and trying to kind of fit in, turn on whatever strategy makes the most sense in the environment, which isn't really something I could do when I first started, because I didn't know a lot of what I did and didn't know. But as time has gone on, you pick up more skill sets as you're in the game longer. But I would say that the idea of how I trade and how I think about it is the same across all instruments and timeframes, generally speaking.
No, it's very interesting. So you have been around trading for quite a while now. It should be how much? Like around 20 years, something like that?
Yeah, around 20 years, which makes me feel like an old man. I'm only I've turned 41 on April 6th. So I guess 20 years. Wow. Yeah. So 20 years.
No, I mean, but that's an interesting thing that you're mentioning, like different market and different products as well. I think that's something, well, in my opinion, I believe that's something that comes within time. And yeah, it definitely shows how experienced you are. And also you spend, like you mentioned, 12 years in the prop space, in the proprietary trading space.
Yes, 12 or 13 years. Yeah.
Wow, interesting. And so, Brad, at this point, how would you best describe your edge? Like currently, what are you looking at? What is your approach to the market? I know you like from off the record conversations, I know that you have, like, you gravitate towards where the action is, if you will. But as of now, what are you looking at? What are you trading mostly?
Yeah, I'll probably answer this question in a long-winded way, because I think it's a very good question, a very difficult question, and it kind of hits on, I feel like trading is each person's art form, kind of an expression of that art, and everyone's going to be different. And we can look at things that good traders do and things that losing traders do, which everyone can kind of read on a book or a chat forum. But I mean, when you look at your edge, I mean, for me, it's an obsessive desire to do this from a young age, and kind of a deep down knowing that I'm going to figure this out no matter what. So at an ultimate level, that was the edge. It was just there's plan A and there is no plan B. And I'll do whatever. I'll learn from whoever I'll go anywhere, I'll try anything, and there's really no quit. Even though at times you feel like you want to quit, there'll always be eventually a positive solution when your desire runs that deep. So that would really be my ultimate edge. But specifically in terms of trading, you have to have things that work on a day-to-day basis or a month-to-month basis. And I would say you can look at it similar to how a general would operate in a different battle, or a coach would assess different teams that you're playing, or even like a scout would look at talent that's going to be drafted into the pros. And you look at all those examples, and every time you do something, it's a little bit different, but it rhymes. And I think the longer you do it, you have an idea of how to prepare. You have an idea of what to watch out for. You've seen something similar before. And then kind of mixed in all that, the preparation that comes with experience, there's this unique thing that you probably do well, or that you gravitate towards. And, so I used to sit next to a guy who was really good at fading. He would fade the trend, and is very accurate and very good at taking losers when he was wrong, and had a great career doing it. But you would never recommend anyone learn that way. And most people who do that, they lose money. So I guess my point is that there is no way to do it. There's only the way that you can do it. And it's very hard to figure that out without trying a lot of things in the beginning. So when you ask the question of what's your edge, it becomes this culmination of experience, desire, preparation. And I think most of all, after the desire piece, which is kind of a big picture thing, most of all is just a really good knowing of yourself, and knowing where you've done well in the past, and how do you recapture that. So, I mean, for me, I'm curious about new trends, and I'm always looking, digging, and I'm buying things first. I have a lot of newsletters and Twitter feeds that I'm following, and I'm always kind of sniffing to what's new. So that's been a good source of finding things for me. Another thing I do is I look at a lot of stupid news where there's a trend in the market and it comes back on something that's not really related to the trend, and I study those, and I use those across multiple timeframes. So adding that stuff up and collecting the examples, studying them, I start to siphon out the things that have hurt me and focus more on the things that I'm strong at. And then when I learn something new, you kind of go through the whole process again of, does it fit kind of into what I want to do? And that changes, because when I first started, what I wanted to do was make money any way possible. There was no time limit. There was no anything, no constraint. But as I gotten older, I have 2 kids, and I have more capital, and I have freedom. So I pick and choose more. So what can I do now to scale the most? What can I do to make the most money with the least amount of stress? Even though I am a junkie and I do enjoy being in here, there's limits to that being productive. You can almost, I think, do more with less. It's almost like sitting in the background and waiting for the market to pull me in works better than me trying to trade. So I don't know if there's a line you can take that describes the edge exactly, but I think if you add everything up, you kind of get the idea.
Yeah, no, and so that's an interesting response, to that question. And so I'm curious to know, like, how you got into that conclusion that your edge ultimately comes from a psychological aspect. And correct me if I'm wrong, but that's kind of the idea that I'm getting. Look, how do you got into that conclusion?
Yeah, well, it's kind of the simple thing I read in the Market Wizards book was one fella, I forget his name, I think Clark said, do more of what works and less of what doesn't. And it's very simple. And it kind of starts with what's been working for me. And I had to break down, even go back to, I asked my parents when I was a kid, it's what did I want to do naturally? What was I drawn to? And it kind of I kind of reverse engineered a lot of my winning trades and thought about, why is this interesting to me? Why is this working? And then I figured out that I like to be ahead of narratives and stories, and I'm pretty curious that way. And then when the charts and the technicals, they line up with something that I think I'm early on, then I get a lot of conviction. I trade a lot bigger. And the same thing with the stupid news stuff. And it's not just those things. There's trading around big levels. So sometimes I'll trade in the short term around big levels that are on the higher time frame, and I have an idea. There's events. I love trading, that we just had some good trades on CPI that I talked about in my podcast. So there's the game theory aspect of index futures in terms of what people expect, and then they get stuck. Why are they stuck? And that means it's going to move the other way, and figuring that out. And I've had a lot of experience doing those trades. So I kind of have a catalog in my brain of how to think that way. So that opens up another can of worms of trades I can get into. And these things were just slowly picked up over time. So it's more of, I mean, I wouldn't call it, I guess it's kind of psychological, but it's not, it's hard to automate what I do. It's
Mm-hmm.
more human strategy. It's more of an open world strategy, I guess is what you'd call it. It's less of, I could have a machine do it, which is, I like that actually, because it's hard to program something that like a stupid news headline that we don't see coming, or people reacting to a number in a way that no one saw possible the day before, are all hard things to program, which gives a
Mm-hmm.
human being an edge. So I like to stay focused on those areas because they're going to endure. They're not going to go away.
Definitely. Yeah, no, it sounds like you're touching on the part that it's more like a more of an art than a science, if that makes any sense. And no,
Yeah.
that's super interesting. And so moving into another subject. So I think we can both agree, Brad, that this market conditions that we're currently going through, they're very different to 2020, 2021. And things have changed significantly. And some traders that I know, I don't know in your case, but I can see it on the social media space. I can see it from other traders. They're currently struggling to adapt to this market condition. So what's your take on that? And like, what opinions do you have on that? And how would you normally approach this type of scenario?
This is one of the difficult things about trading. I think this is what causes people a lot of pain. I think when you're new and you make a lot of money, you think, even if you don't want to think it intellectually, or it'll change, I think you get caught up in that euphoria and it feels good. But there's another side to that. There's keeping that money, and then there's how do you make money when it changes. And 2020 was great day trading for those of you who do that, or short or trade index futures or ETF leverage futures, or ETFs, sorry, when it crashed. And then we had a lot of long only trading on the other side, which people did well with, earnings trading, just ride the market back up. And it got really goofy and everything started, people were throwing money around in crypto and electric vehicle stocks and solar. And that was kind of, you saw all the meme stocks and Reddit stuff and free trading, and we get the pendulum swung really far. And then it's kind of 2021 kind of mutated into like a half and half year.
Yeah.
And then we saw, part of that carried over, and then it cracked. And then we kind of got a taste of like, wow, this is what it feels like when they take 50% out of something in a month and a half. It's really painful. And then we've gone to 2022 with that environment persisting. And I think it's really difficult when if you traded well from the long side and that worked for you, it's how quickly can you switch to understand that the market's not behaving the way it used to, and preserve your money, and then figure out how you're gonna make money now. So for me, it's more short-term trading right now. It's less overnight holding. It's an awareness that things could be overvalued still. Things, naturally, the pendulum will swing hard one way and hard the other way on a bigger picture. So with people sitting at home spending money from the government and trading for free, I think that there's a price to pay for that, and we're seeing it now, and I think we might see it. I don't want to predict, I don't know, but it would not surprise me if we saw that play out on the other side too. So, I mean, I think there's going to be really good opportunities for short-term trading, and I think some of the swing stuff it'll come back too. It always comes back. It's just a matter of, can you handle shutting yourself down and then learning something different when that's happening. And some people just trade what they're good at. They don't want to learn something different. They just wait for their conditions to come back, and that's fine. You can do that. How I'm adapting is to understand that long only stuff is not working as well right now. People are conditioned to do that and only that, especially the new group who came in the last few years.
Yep.
And those of us who've been around longer have seen the other side of it. And I don't know. It's also we have very high negativity right now, so it's hard to go down when we have a lot of negativity too. So for me, it just means I'm staying a little shorter term during the day mostly, which isn't my ultimate preference, but I think it makes the most sense right now. And I'm happy to move back to more swing and position trading when it sets up. But I haven't really seen that set up yet to this point.
Yeah, no, I do agree, and it kind of all started in like you mentioned, 2020 was a great year to be swinging on the upside. 2021 was kind of half and half. Like the last half was kind of moving sideways mostly, and then it all kind of cracks when in December 2021, the term transitory an inflation from the central
Yeah,
banks kind of, yeah, that's when things change. And then you have all the geopolitical tensions with the war and invasion. And yeah, I do agree. Markets have changed very drastically, since the pandemic, which I think was kind of like a moment in history to kind of pinpoint. And so, but Brad, for those traders that started to trade during the pandemic or after that crash of the pandemic, and they're like struggling right now, what would you suggest them to do?
first of all, preserve your capital, do less harm, number one. Number two is you start to try new things with small size, and you start to figure out, is there another strategy I can add? And for me, it's trading during the day. That happens to be a skill set I spent 10 or 12 years developing. So I mean, that's easier said than done, but I think I'm sticking around FOMC days, CPI days where I know there'll be a lot of volatility and trading those, and then not doing as much when it's slow. And I will add that there's a lot of long action going on in coal and oil, in gold. So there are things, I'm sure there's traders who are swinging and position trading in those names and are doing fine right now. So there is stuff to do. I'm kind of referencing growth stock traders because I think most people trade growth stocks when they swing or when they do position trades. And that's kind of what I was referring to more, but there's things going on in those other areas. I think one of the things when you're new is the pain and suffering of this is usually a risk management teacher. And for me, at least, I had some nice profits I gave back at the end of 2021 in my crypto trading. And I think a lot of it is just a reinforcement of it's this much above the 50-day moving average. You have a big position on. How are you going to feel if it comes back? Are you going to be able to add? Are you going to panic? If you're going to panic and have a meltdown, you need to take some off now. And you need to have really good rules when you're trading 2 days to 2 months. If the position is a little bit of both, you have to really clearly specify what you're going to do with each piece and when. Or else what happens is you start to get lulled into complacency when there's some quiet days and you forget what you're doing, and then it hits you in the face. So those are some of the lessons I picked up. But I think for newer traders, it's just this is where you hang around and you try some stuff and you do it small. And I think psychologically you might feel terrible, but financially, if you're doing it small, it's really of no consequence. So it's a learning time. It really is. It's not. My friends who day trade futures have been doing great the last few months. My friends that growth stock trade are struggling and they're frustrated. And there's always someone who has an environment they like. You can't be good at all of them, but you can use these times to cut down and learn. And you just learn more about yourself and try to do less damage. It's not very fun to hear that, but that's what I would do with it.
Yeah, and I do agree. And we have had like conversations around this, like having different it's like a tool set, right? You had different tool set for different scenarios. And so, yeah, I mean, being open enough to kind of learn different approaches, even if it feels psychologically uncomfortable at the beginning, it's something that, you add to your tool set. And then eventually when you kind of have the same scenario happening or a similar scenario happened, you can definitely kind of use your tool and trade different market. And I think that's a really good advice, Brad. So getting a little bit more into kind of the trader mindset, kind of the growth mindset, if you will. I know you're pretty big on this as well. So what do you do in a daily, weekly basis or on a constant basis in order to improve as a trader?
Yeah, real quick before I get to that, I wanted to add from the last one. I just finished a Gracie jiu-jitsu book, Rickson Gracie. I think it's called Breathe. I don't know if you've heard of it. It's his life story on learning, mastering jiu-jitsu, and it really had a lot of parallels to trading, but it talked about preparing for a fight and how he would often not have a plan because during a big fight, when you have a plan, it sounds counterintuitive, but you start getting pigeonholed into what you think. And if the opponent totally surprises you with something else, you're kind of stuck in what you planned for subconsciously. So I have found that I'm aware of a variety of scenarios that could happen. I like to build a lot of scenarios for different things that I might do, but I really don't want to get too caught up in what everyone thinks or what my plan might be besides that, because then I tend to be mentally inflexible. So I think kind of remaining fluid and loose each day is a really good way to be. I like to have awareness of each day and week of what could happen. But usually the best stuff is when everything goes to hell and happens in a way that no one expects. And those are usually the best trading opportunities because everyone is surprised. So I think it's a really important point to maintain. Everyone wants to be really prepared and work really hard, but sometimes just being a little bit more open can lead to better results. It's not that you don't want to be prepared. It's just there's a difference between being over prepared and then you become rigid.
Mm-hmm. Mm-hmm. Yeah, I do agree. I mean, just sharing a little bit in a nutshell what has happened with my trading. So I'm mostly swing trading in the long side, and so one thing that one variable that I've added in my trading after this market conditions kind of change, it's that I'm focusing more on what the themes are. A good example for could be like very recently there was a coal ban, I believe from Russia to other countries, and so that basically kind of trigger a few coal individual names in the U.S. Equity space, and I saw my setup, my classic technical setup, and then I kind of combined it with this macro theme that it's happening, and I was, what I'm trying to say is that you got to be open enough to kind of combine things and get your hands dirty with things that might not be exactly your bread and butter, but it's part of the what do you do.
That's a good example, actually, because I guess that's in the realm of possibility that would happen. But I think you had brought up another good point, actually, which is I think it's really important to kind of be in connection with what's in the news and what's flowing, because then other things that are similar like that, what you couldn't necessarily say you predicted it, but it's very possible that would happen, and you're ready. You have the names, and you're looking at the charts, and you're in the game. So it's like when interest rates are plummeting, you got to know that the NASDAQ is probably going to get hurt the most. It's the most sensitive, and you need to have the right stuff up for the environment. So you can't. Every environment is going to need some different tools that you need. Like in 2008, I was always watching the bank level 2 books because banks were driving everything. I was watching the brokers. That doesn't matter right now at all, but in 2008 that was huge. And then in 2000 it was the important tech names. So there's always your secondary indicators and what's important. That was the subprime stuff before in 2008. In 2016, I believe, or 2011, the European financial crisis, whenever that was, I can't remember now, but it was watching European books and banks. So yeah, and like watching gas right now, unleaded gas, they're watching things that are politically charged and sensitive can provide better trades. And that's where a trader wants to be. So I think that awareness is part of it too. I'll go back to your, what do you do on a day-to-day basis question? Is that okay?
Yeah, definitely.
Yeah. So, for me, it was different in the beginning. In the beginning, it was, I used to plot all my trades, red and blue ink. I would put a circle, a dot and a circle when I'd enter, and then just a dot when I would exit. And I would do it in blue when I buy it and red dots for when I'd sell. And at the end of the day, I'd want to look at that plot and I want to be proud of where I was buying. Either I'm buying a breakout and I'm getting out if it doesn't work, or I'm buying the bottom of the range. I'm not stuck in the middle of the range. I was very diligent about that for probably 10 years. And I don't do that as much anymore. It wouldn't hurt to do it. I just don't. But that was a big part of my process when I started. It was evaluating events ahead of time, writing down things that could happen, writing down how I acted. Was there a surprise? I also like to come into the day with asking myself, what would be the biggest surprise today? Because it opens my mind to what might happen. This is when I was day trading more. So there was that. It was obviously sleeping well, exercising almost every day, essential for me. And then I've read every trading book multiple times, and I've gone back recently and done that again. I don't necessarily know if that helps you that much as it's just a hobby for me because I enjoy it. I enjoy learning about the market, talking to others, but I really do think as you do this longer, it's knowing yourself at a deep level and managing your risk. That's really all it is. You cannot lie to yourself. So whatever you can do to understand, like if certain amount of risk makes you really uncomfortable, you got to see that ahead of time and not put yourself past that threshold when you're going to blow up. And you just keep getting better and better during every drawdown of knowing yourself a little bit closer of what you do well and where you're going to get hurt. So it's one thing to kind of nod your head intellectually and understand, hey, I have a big winner and it's 70% above the 50-day moving average and I feel really comfortable, but it's close to my target. So, okay, it's close to your target, but if it comes back to that 50-day, which I already said, which is likely, you're going to throw yourself out a window because of the size you have on and the profit you're going to get back. And it's thinking about that in real time before it happens, understanding how it might feel, and really just being close with all that intuitive stuff and managing it and preserving that momentum. Because when you lose that momentum, then that's worth almost more than the money, because then you spend that time kind of picking up your thoughts and emotions, and you can't really move forward until you get out of that stuck energy. So I think a lot of my work now is just, how do I stay in a place where I maintain my momentum every day and I feel good, and I'm not in a place of panic or putting myself in a position where if something doesn't work out, I'm going to be in a bad mental state for a while. And staying in that flexible, loose mindset where I can handle whatever comes at me is kind of where it's at right now for me. And that's like the next level of advancement, because if you can do that, you start to really trust yourself trading bigger, because you know that you're going to cover your risk, and you're not going to put yourself in a position where it's just not good for you.
Yeah, no, it sounds almost like, and correct me if I'm wrong, but you're taking care of your financial capital, but you're also taking care of your mental capital at the same time, because you know that you want to have that resources available whenever like good opportunities arise, and you can, hit it hard basically.
Definitely.
Yeah, no, that's really interesting, Brad. So you did mention, well, at the beginning, we did mention that you were in the prop trading space for 12, 13 years. So can you share with us maybe a little bit of the best practices that you saw from other traders there, like good traders at the other prop firms, maybe a few things that they were doing that actually improved their trading?
Yeah, I mean, the plotting the trades was really great. For me, I found out who was good at it pretty quickly, who were the better traders, and it was just picking their brains. I would actually ask for their trades, and I would plot them myself to see where they bought and sold. I would ask why it happened. I really wanted to know the thinking process behind something. Like, I see you were buying this and losing, but there was a huge move after in the direction that you were buying. Like, what did you see to feel that ahead of time? What were you thinking about? And I would get responses like, well, I noticed that the banks were pulling us down, but nothing else wanted to go down. And everyone was negative about a report yesterday, which was expected. And it kind of made me figure we were going to rally later today. And I'd say, okay. And I would just learn to think like that, understanding positioning, understanding why people are doing things. That was the biggest thing that I picked up. And one of the guys I sat next to was really successful. I would see him sometimes have his biggest size of the day on long at the high of the day, which ended up being the high, and then bullish, and then end up flipping and being short quickly, and then having a great, a great trade or a series of trades when you thought he was bullish. And that's kind of why short-term things change so quickly. You have to be thinking about all these things that are hard to even tell the person next to you about. So it's hard when you're trying to explain to someone what you see in the short term. At least position trading is a little different skill set. I've learned they're very different, and it's been tough to try to learn that along with the stuff that I used to do or that I still do. But my first skill set, I guess, it's different and very different, kind of like running a 100 versus running a mile or something like that. Different training, different muscles, different stamina, and just observing others who are successful. And that's something that when you're virtual is harder to recapture. So the job is to figure out, how do you recapture that from people? How do you find out if someone made a series of good trades, or if they're thinking about something in a way that's unique? How can you take a piece of that for yourself and maybe learn about that? And that's just going to take some digging and some networking and some work. And you just have to be scrappy. I was relentless and scrappy, and that's what I did. And I kind of put myself in that spot to learn that, and I still try to. But there's just no easy way, really, except for just you have the desire, and you're going to do what you need to do, and you're going to find who you need to find.
Yeah, no, that's interesting. And I do agree with you in the sense that in this space, in this business, you get like bits and pieces from everybody, and you kind of make it your own. Yeah, no, that's really valuable, Brad. So we're starting to run out of time. So to wrap it up, what word of advice do you have for developing traders, or those traders that are having a hard time in this current market conditions?
It's emotionally and psychologically brutal sometimes. And I think that I wouldn't wish it on anybody, this business, or my kids. Who knows what they'll do, but I wouldn't really want anyone to get into this if they didn't really want to do it, because as you know, there's a ton of freedom. It's the best life in some ways, but when things don't go well, the amount of personal growth and probing at dark places and things, I mean, you could be the most overcapitalized veteran trader, and at times you will feel insecure and an emotional basket case. So I would just say that everyone goes through that again and again, and that's just part of how this works. And anyone who tells you it's not like that or makes it sound simple or all scientific is really full of shit. That's not how it works. And I think that anyone who's around long enough will agree with that. And it's just not like that. So if you want to be here doing it and you're going through one of those times, it's just preserve your financial capital, your emotional capital. One of my friends who's a growth stock trader, is a really good growth stock trader, is taking Brazilian jiu-jitsu right now. He's spending more time with his daughter, and he's just staying away a little bit. And that's one way to approach it. And it's not the only way. I mean, I'm kind of crazy where I'm always trying to learn and try something else, sometimes to my detriment, but you got to be who you're going to be. But it's just part of it. Yeah. And maybe what I'm saying is just letting people know that that's how it is over the long period of time. And it will always be that way. It'll cycle again and again.
Yeah, no, and that's really valuable coming from you, who has about 20 years of trading experience that probably have seen different market conditions. And so also I wanted to mention that I don't know if you remember, but probably in one of those off the record conversations that we have had, something that kind of stick to my mind, it's that you can be a long time like veteran trader, right? That has like a lot of years of experience that have done really well, like throughout the years, but it only takes like a couple losing trades to actually feel like the worst trader ever and to feel that you're not able to put a winner on. But it also takes like a couple winners to kind of rebuild that confidence and feel again kind of at the top, and that you're able to make it. And so that's really interesting from a psychological standpoint.
Yeah, I mean, it especially from when you're really beaten down, it just takes really one thing that you see and you feel like, okay, I can do this. I see this, I can do this again. And then that momentum flips the other way. It's true. It can turn around fast and it can go south fast. And I think personality might have something to do with how fast you get down and how low you get versus everyone has their breaking point though. And the market always finds the breaking point for everybody. But I think sometimes if you can manage your financial capital really well, but emotionally and psychologically just be terrible. And sometimes you feel like you're okay psychologically, but you lost way too much money off the top. Sometimes that's a little trick where you make a lot and then you lose a lot. And you feel like it stings, but you're not that upset because you're still stuck in the fact that you made a lot, but you actually get back 50% quickly. And that's sometimes psychologically, it doesn't track back to you like it should. And then other times when you're losing, but you're small, psychologically, it tracks back as I suck, I'm a loser, I have no idea what I'm doing, but you're actually doing a good job because you're not getting killed. So the feelings are sometimes misleading.
Yeah. Well, it's been great, Brad, having you here. I'm really happy. And so before we wrap it up, where can listeners hear more from you?
Yeah, I have a podcast called Trading Life Podcast by Brad Jelinek. It's on all the platforms. Also, the website that has all the episodes is tradinglifepodcast.com. You can just listen to them on there. And it's just me chatting about things I see and about market conditions and just kind of talking frankly about what I go through, my journey. That's a lot of it, really.
All right. Thank you, Brad, for letting us have you here. I really enjoyed this conversation with you. And thank you again for being part of the first edition of Tradervue Conversations. And we hope to have you in next time. Thank you.
Yeah, you're welcome. Thanks, Richard. Have a good day.
Thank you for listening to another episode of Tradervue Conversations. If you really enjoyed our content, please support us by giving us a thumbs up, sharing, and subscribing.